everyone, and welcome back to my channel, My Crypto Teacher. My name is Ida, and I am your crypto teacher. Regulation, regulation, regulation. Yes, whether you like it or not, we need crypto regulation to provide us with clarity. It also ensures that our lawmakers have an understanding of this ecosystem and this new asset class, and it will allow millions and trillions of dollars to come into this particular asset class, which will drive this asset class very, very, very high. Okay, so my name is Ida. I bring you videos a few times per week. Today, I'm going to be talking to you about crypto regulations. There are some senators that are United States senators that have created a bipartisan bill. I'm going to talk a little bit about that. Also, this is very important. The EU Commission, they actually have developed a better understanding of DeFi. And because of that understanding and developing their capacity to figure out how DeFi can be positive for the world, they are changing their views on that. I'm going to share that article with you as well. And finally, I'm going to talk about how the SEC, I know Gary Gensler is not our favorite person, but he has expanded his agency, and that will allow them to do some additional work. So anyway, remember, before I get started, if you haven't already, click on like, and subscribe, and share, because sharing is caring. Okay, all right, so let's go ahead, and I want to get started talking about these really, really good articles. So the first article is, I want to talk about the SEC. The SEC doubles down on crypto regulation by expanding their unit. So they will add about 20 people to their staff. The United States Security and Exchange Commission, SEC, announced Tuesday that it would nearly double the number of personnel responsible for safeguarding investors in cryptocurrency markets. Now, you all tell me what you think. Do you think that the SEC is really trying to safeguard investors? I don't really think so, because they've already changed some of the regulation that only allows high-end investors to be able to participate in certain yields from certain companies. So I'm not sure about the SEC having the best interest of heart of just regular everyday Americans. I don't know if I agree with that. Anyway, that's what they're claiming. You know, they think they have to save us from ourselves, but who knows? Anyway, as per the announcement, the SEC cyber unit, which includes the crypto assets and cyber team, will hire 20 new people for 50 dedicated positions. They're going to hire 20 new people for 50 positions. Somebody's going to be overworked. That doesn't add up to me. If you got 50 positions, you need 50 people. Okay, all right, I'm not getting off on a tangent. I don't understand this. You need 50 people for 50 positions. So it sounds like they're going to make these people work double time. It doesn't make sense. But anyway, so they've hired the people to work in the unit. And by nearly doubling the size of this key unit, the SEC will be better equipped to police wrongdoing in the crypto markets while continuing to identify disclosure and control issues with respect to cybersecurity. Okay, so here's my thing with that. So it looks like the SEC and the American government, they are fixated on the negative sides of cryptocurrency. And I understand that you're looking for wrongdoing, but why don't they spend some of that energy uncovering the positive things that cryptocurrency brings to the table? So I'm just not understanding that. Why is the focus just on the negative? And I think they need to also focus on, use some of that energy, some of those new positions, to find out how this new technology, this future technology, can be an asset to the country and the world. So that's that. So Gensler emphasized that the SEC's protections for investors of traditional assets should also apply to crypto traders. So the protections that they have from regular assets, they want to also make sure that we are protected as crypto traders. Okay, I get that, because we do know that a lot of systems are rigged, and we know that sometimes people can take advantage of retail investors, but they need to have an understanding of what this ecosystem can do in the different sectors in this ecosystem before they try to figure out how they can protect us. Gensler also urged crypto firms with securities to register in order to safeguard investors. When they say urged, he means he threatened them. They threaten people because they use their power, and they're not urging people, they're threatening them, right? Okay, the lack of regulatory clarity in the United States, which is affected by various authorities, including the SEC, Commodities Future Trading Commission, and Financial Crimes Enforcement Network, has been criticized by several cryptocurrency firms. Yes, it's been criticized because basically the SEC is being a bully. They are leveraging huge fines on cryptocurrency companies, and those fines trickle down to us, the retail investor. That's why I'm thinking it's a contradiction when they say that they are trying to protect us. I'm not sure what the SEC is up to, but the fact that they have increased their number of employees, 20 employees for 50 positions, that doesn't even sound right, but okay, we're going to see. We're going to see, because we do know that regulation is needed and it's going to come. Now, here's some better news. This is much, much better, much, much better. Senator Loomis teases upcoming crypto bill, says NFTs won't be included in it. Now, here's the deal, guys. There are so many different layers to cryptocurrencies and digital assets. Bitcoin is in a class by itself. NFTs are very different. You got different types of NFTs. You have digital assets, you have tokens, you have DeFi, you've got just so many different sectors that are within the cryptocurrency and digital asset ecosystem that you can't have it all in a package. It's not a one size fits all. There's so many different pieces to it that I actually think this politician kind of makes sense. The other thing that I like about it, this is a bipartisan bill. So this Senator Lummis, I think she's a senator out of the state of Wyoming. She has teamed up with another Democratic senator who was in the state of, out of New York, Senator Gillibrand. And these two senators have paired up to write a bill. So the United States Senator Cynthia Loomis, she was on a live stream and she was talking about a cryptocurrency bill that she's co-authoring. The Wyoming Republican said the bill will be introduced as one big piece so people can see the big picture and then be broken down into 5 or 6 components for consideration by the appropriate congressional committees. I like that. I like that she's given a big picture and then they're able to chop it up, which they should because there's different layers to it. What do you think? Should they just have one size fits all? Or should they have a team of people put together that can actually dissect this information and do common sense things that works for us, the taxpayers? I know I'm a taxpayer. So the bill, which Loomis is expected to introduce along with New York Democrat Kristen Gillibrand, is designed so that it works within the traditional framework for managing and regulating traditional assets, Loomis said, which is smart. She's not trying to recreate the wheel. She's not trying to start from scratch. She's trying to say, hey, we have this current framework already in place, right? Let's take this new asset class and see how it can fit within the framework that's already established. Why is that important? It's important because if it's done in that way, it can be done a lot faster, which is what we want. We don't have all day. The United States is already behind. They're behind the 8 ball. So I like the idea that this Senator Loomis and Gillibrand, that they've teamed up and created a bipartisan bill, and they're trying to be smart and use the framework that's already there. And then whatever doesn't fit within this framework, they can make adjustments and modifications so that they can get this regulation going quickly. All right, I like that. Loomis said it would divide cryptocurrency oversight between the Commodity Futures Trading Commission, the CFTC, which is very smart. I like that. She's smart. And the Securities and Exchange Commission, SEC. Oversight of the crypto assets will be given to the SEC when something fits within the Howey test that makes it a security. Gary Gensler is a power freak, in my opinion. And I don't think that they have a clear understanding of what all of these digital assets and cryptocurrencies do and how they function in this ecosystem. So I do believe that there needs to be a divide, because some of these cryptos and assets are commodities and some are securities. Some are probably neither. Some could probably be both, right? So there's a lot of work to do here. So I like that they're looking at dividing the cryptocurrencies and the digital assets so that they can appropriately and correctly classify the different cryptos and digital assets in this particular ecosystem. So that's good news. I like that. And I'm looking forward to that bill. Now, regulations must also address altcoins and consumer confidence, Loomis said, adding they need to allow regulators to separate the wheat from the chaff in the space. This will make it possible to use crypto. Now listen to this. This is what's powerful. This is why crypto regulation is necessary and powerful. Listen to this. Crypto regulation is necessary and powerful to take this asset class to the moon, per se. This will make it possible to use crypto for payments and integrate the asset class into 401k retirement savings packages. So this crypto regulation will allow for 401ks to comfortably and confidently invest in crypto and digital assets. Okay, there's about $4 to $5 trillion that's currently sitting in 401ks. 4 to 5 trillion. Okay, that's almost double. That's more than double the size of the entire crypto market. So that's a lot of money, and people are looking to diversify. And I'll tell you why they're looking to diversify in a minute. Hold on. The Wyoming senator indicated she was confident. She's confident that the bill would pass, as digital assets are nonpartisan. Digital assets are nonpartisan. Independents love digital assets. Republicans love digital assets. Democrats love digital assets. Non-affiliated love digital assets. Everybody. Because why? Everybody that's smart sees the value in this new asset class, and they want to participate in the greatest shift of economic wealth that will occur in our lifetime. That's why it's nonpartisan. Nobody has a hold on digital assets. Not the Republicans, not the Democrats, not the Independents, nobody. It takes all types that are involved in this. Okay. And because it's nonpartisan, it should go by quickly. It should get through quickly. And she expressed hope it will move more quickly through the legislative process than might be expected for such a complex bill, because agencies currently have to make regulatory decisions on the fly. Yeah, they're making regulatory decisions on the fly, which is a problem. Loomis mentioned that the bill touches on a central bank digital currency, a CBDC, without going into detail. Environmental issues will not be addressed in the bill, nor will non-fungible tokens, NFTs. It's so hard to figure out how to categorize them, Loomis said of NFTs. She's smart. I like this lady. I like her. She is smart because she understands that there's so many different layers to it. She's not trying to do a one size fit all and fit everything into a box. And I like that she had the courage to say, we don't have a full understanding of these things, so we don't want to regulate them right now. That's just smart. It's smart. It's smart. She indicated that regulators may be able to decide on how and if to regulate them after the passage of the bill. That makes sense. So as they educate themselves and build their knowledge and capacity, they're going to figure out what to do with NFTs. That just makes sense to me. Now, guys, here's the thing. You all know that I'm not a financial advisor. I simply share information with you about my journey in cryptocurrency, and I try to educate you on different cryptocurrency and digital asset pieces of information. But here's what I know. You cannot work yourself into wealth. So I know that. That is why I invest. I have a few stocks that I invest in. You know, I love Google and Amazon. But that's about it. I have a couple more that I've invested in, but that's it. What I know is I only have so many hours in a day. I cannot work myself into wealth. I can't. That is why I'm an investor. The other piece is in a traditional 401k, and this is why I know I'm coming back to my point. Here's why I know 401ks and pensions are going to invest in crypto. The average return on investment for 401ks and pensions are about 5 to 8% per year. 5 to 8% per year if you're lucky. Because of where we are with crypto, the returns on crypto are easily 100%, 200%, 3,000% in a year. So over here, you can earn 5 to 8% on your money. Over here, you can earn 200% on your money in the same time frame. You do the math. What do you think pensions are going to do? And when you invest in your 401k, you have different layers of risk. Sometimes you have high risk, sometimes you have low risk, but they're still volatile. There's volatility in any market that you invest in. All right, final article, and this one is also good news. The EU Commission report suggests rethink of regulatory approach to DeFi. I love this because now these regulators and these lawmakers are educating themselves, and they are getting a clearer understanding of what blockchain, cryptocurrency, and digital assets are going to do for our future and how it will improve our lives. Okay, I'm going to be very quick. So the report highlights DeFi potential for lower financial audit costs and substantial opportunities for financial integration across borders. Analysts from the European Commission showed an unexpected understanding of how decentralized finance, DeFi, actually functions. Having defined it as something different from the traditional financial system and acknowledging that it would require rethinking the approach to regulation. What do you all think? I think they're starting to get it, guys. They're starting to get it. I'm telling you, they're starting to get it. And when they understand it, because remember, these lawmakers, first they got to figure out how they can benefit. You know, they've got to make money off of it. Once they figure out how they can make money off of it, then they're all in, because they're really not there for us. They're there for themselves, in case you didn't know that. They're not there for me, and I know that. They're there for themselves, right? They want to make sure that they're getting rich, because they don't make much money doing the job. They make a lot of money from lobbyists and companies and so forth. So anyway, the report defines DeFi as a newly emerging form of autonomous financial intermediation in a decentralized digital environment powered by smart contracts on public blockchains. It acknowledges the smart contracts to be substitutes. This is why banks are scared. Banks are scared. Substitutes for regulated intermediaries, those are banks, and suggests regulatory efforts to focus on communication with the specific DeFi teams that create these contracts. So now they want to talk. They want to communicate with the developers of these protocols. They're ready to talk. They are ready to talk now about these project leaders on the blockchains. So basically, to sum it all up, these are the words of the EU Commission, and these are profound. Compared to the traditional financial system, DeFi claims to increase the security, efficiency, transparency, accessibility, openness, and interoperability of financial services. And they're right. DeFi will increase the security, the efficiency, the transparency, accessibility, openness, and interoperability of financial services. That's exactly what it'll do. So there you go. I will go ahead and add the link to all three of these articles in the description down below if you want to click on it and read the articles on your own. So remember, if you haven't already, please click on like. Don't forget to subscribe, and don't forget to share, because sharing is caring. Okay, my name is Ida. I am your crypto teacher. Take care. Until next time, I'm out.